what do people mean when they say are the buyers in control or are the sellers in control? For someone to buy, there has to be a seller, and for someone to sell, there has to be a buyer. So how do we end up with the market being heavy or the market being on fire? And I guess in the good way, taking off, prices are taking off and on a run. And this is actually a way simpler than you guys are thinking of it. I'm going to explain it. I actually just got a comment on my YouTube channel asking about this, and I thought of a really good way to explain it. So I'm going to do that just in this video to help you understand, one, exactly how the market is an auction and how auctions actually work. Right now, it's not an auction where there's just, one thing for sale. It's really an auction in the sense that people can put things up for sale or buy them at any point in time. It's not just, there's not an auctioneer saying they're like 1,000, accepting bids, whatever, right? So if you're new here, my name's Forrest. I invest in stuff. I'm a trader. You can join us live every single day. Hit the link down below. If you are looking for a prop firm, you can sign up for Apex using my link below. There's 90% off. It's in every single video. It's down there. Hit the link, use the code, you get 90% off. I have Apex videos. I think my one video has 11,000 views. Go watch that one. I do a review of Apex. We're not going to talk about that in here, but yeah, great tools if you want to get set up. And also subscribe because I'm almost at 4,000. And I mean, maybe by the time this video comes out, I'll be at 4,000. Anyways, so let's just talk about the downside. I want to set this up, put this in your mind. I want to explain why the price of something might go down and why we might say that sellers are in control. So we have a bunch of people and they own shares of, let's use Nvidia as an example. A bunch of people own shares of Nvidia, and there's people who are looking to buy shares of Nvidia. Now, in order for these people to sell their shares of Nvidia that they own, for whatever reason they want to sell, maybe some of them want to take profits, maybe some of them want to, get out because they're losing money. We don't know their positions, but these sellers are all trying to sell at the best price. So they're competing on the sell side. There's incentive for them to sell while the price is higher. And then we have buyers. Buyers are also looking for a good price. Now, we don't know the state of Nvidia. We don't know the fundamental state of Nvidia at this time, but let's just say that Nvidia puts out some terrible news. For whatever reason, they can't get electricity to half of the buildings for their data centers. I'm not going to do real fundamental analysis because for the sake of example, we just need to know that in general, the consensus from the general public and all of Nvidia's investors is that, man, this thing is no good at its current price. But the only way for the price to go down is for people to sell. People have to sell. Now, why might they sell? Well, first, it starts with the people that are in the green. So these people, let's say they're up, price of Nvidia has been up 200%. The bad news comes out. They're like, okay, well, now I need to take profits. So they start taking profits by selling, and they're selling into people who don't believe the news. They sell into people who don't believe the news, but because these people are taking profits, there's a huge amount of people that are willing to sell at this price. Now, they are putting their orders on the market first, and this is really important. Market is a first in, first out machine. So the seller puts his shares, his lots on the market first. Until a buyer meets that price, the market isn't going to move from that price. So the seller puts his shares on the market for that price, and then assuming another seller doesn't come in and undercut him, is going to transact at that price. So a buyer comes in and says, okay, you know what? I'm willing to buy at this price because I don't believe the FUD. Scenario number two, this guy's like, okay, I want to take profits, but so does everybody else. Everybody wants to take profits at the same time because they're like, okay, well, I've been in for a long time and now the sentiment's changing. I want to get out. So seller one puts his shares on the market for a price. Okay, so the market gets marked at that price. He puts his shares for sale at 500, but the best bid at the time is 499. So it doesn't transact. But then another seller sees that, there's a bid for 499. So he comes in and matches 499. Well, market moves down to 499. Those orders get eaten up. So then somebody else goes, oh, I see that somebody got it for 499. Well, maybe I only want to offer 498. So then another offer comes in, and the sellers keep chasing the price down, trying to get out because they want to take profits. But what's more important here is the overall sentiment and who was first in the market. This is so critical and important to understand because whoever's first and whoever has the most liquidity, their orders are going to get met. If there are more people selling first, looking to get out, and there are more sellers competing than there are buyers competing, the price is going to move down. And what do I mean by competing? And again, sellers want to sell at a good price. And no matter your situation, you want to sell high and you want to buy low. It doesn't really matter. It doesn't matter if you're taking profits. It doesn't matter if you're trying to get in. It doesn't matter if you're trying to get out. So if there are more sellers competing than buyers competing, then the price is going to run down. This is very, very simple. Let's imagine the inverse. It's like, it doesn't even matter what it is. It doesn't matter if it's Nvidia. You can pick your favorite stock. Let's say that there's no offers in the market and I put an order up and I say, you know what? I'm willing willing to buy 100 shares of Apple for $100. Okay, all the people who own shares of Apple, I don't really like that. I don't think that your bid is good enough. So nothing happens. Nothing happens, and nobody really wants to sell. None of the people who want to or who have shares of Apple want to sell. So everybody looks up my bid, and then someone else goes, you know what? I'm going to do a bid for, I'm going to use actual market terminology, otherwise it'll confuse you guys. I'm going to do a bid for $200. Everybody who owns Apple goes, I don't know. So, but we see this on the order book. We see the bid for 100. We see the bid for 200. Somebody comes in and says, you know what? I'm going to bid $500. Somebody who's really fast on the sell side, he says, you know what? I'll sell my shares for 500. Boom. Market gets marked to $500. Everybody sees, all the people who were previously putting in bids, they see that the market transacted at $500. Now, people want to buy Apple. There's a lot of people who already own Apple and they're willing to sell, but they're not really trying to sell. The buyers are competing more so than the sellers, and the buyers want to get a good price. So they're like, dang, another buyer comes in and is like, okay, I don't want to wait too long, so I'm going to get in at 501. So the market goes up. Another seller says, you know what? I'll get out at 501, meets that bid. So then the market gets marked to 501. Now the buyers are sweating. They're like, crap, how long should I wait? So buyers start pouring in. They compete. Someone puts up a bid for 502, but before that can even get eaten, someone puts one up for 503, then 505, then 506. And then a seller says, you know what? I'll do 506. Comes in, all those orders get eaten up. Okay, but there's another buyer who's like, man, he's been sitting on the sidelines with like 50 million and he just missed 500 to 506. So he puts a bid up for a huge amount of shares at 510. He's like, I want to get filled. I want to get these shares right now. Seller sees that. He's like, man, well, the price has moved this much. The price hasn't moved this much in a while. I might as well sell now. And so that order gets filled. So you're not wrong. Ignoring market makers whose job it is to fulfill orders and create liquidity and be the other side of these trades. Just think of it as a general auction or system where people are competing either as sellers or they're competing as buyers. And whichever side has more competition is going to drive the price. And the side that has more competition is dependent on the exact moment in time, which is why the price zigs and it zags and it zags and it zigs and people wait. And just like in true competition, we'll go back to my example. Let's say that I'm a buyer. I see it go up. I see that guy who put in 50 million bid for all those shares because he wanted to get in. And you're like, you know what? I think he's the last big bidder. I don't think anybody else is going to come in. I'm going to wait. I'm going to wait these sellers out because I want to get a good price. So the market goes up from 500 to 510, and then it starts trickling down because there's nobody else who wants to beat 510 at the time. And now all the sellers are like, crap, I missed my opportunity to get out. And so the market doesn't do anything. It stagnates for a while. Then a seller is like, you know what? I'm willing to get out for 508. So it comes down to 508. Then the seller's like, crap, because they waited too long. So the sellers start competing. It comes back down to 502. It doesn't come back down to 5. It comes down to 502. And then me, a patient buyer, I go, okay, all right, I'll get in first now. So it ran down. I want to start making the first move in the market. So I put in a bid for 502, gets eaten, and I just saved $8 a share. That is how the market works, guys. It's not like you can sell into a void or that you can buy from a black hole. It's all about which market aggressors are winning, who is competing. It's all competition. It's actually rather very simple. I've seen a lot like in books and things, like all this theory about like, you know, how can the buyers be winning or the sellers be winning? And it's very, very simple in my mind and always has been. It's kind of weird that people don't understand this, I guess, unless there's some missing component. Now, there are other components, other layers to this. Again, market makers. There are people whose job it is to provide liquidity in a market. So they will match in orders. The reason why you can buy options, for example, when they have a volume of 2, they will sell that to you and hedge against it. So there are people who will create liquidity and hedge against that trade in order to say delta neutral, market makers. Same with shares, etc. We're going to ignore that for now because it really doesn't change the overall equation. It makes it more complicated. There's more inputs and outputs, but it doesn't change the overall equation and the fact that price moves because of competition, and it's people either trying to buy at a really good price, and a really good price for a buyer is as low as possible, or they're trying to sell at a really good price, and a really good price for a seller is as high as possible. If you thought that this video was useful in helping you understand price action and, more important, liquidity tracking, I'm a big price action trader, volume profile trader, and this philosophy helps me understand the thesis, all the thesis, and really drives all the thesis that I make in the market. It really does. Understanding that it's a competition and people are competing for these prices. Think of it that way. It's going to make a lot more sense for you. It's going to make sense for why when earnings beats, things fall off a cliff. Why when people miss earnings, they underperform, the stock skyrockets because people are competing on price first and foremost before anything else. If you found this useful, please do subscribe. I think I already said that in this video. I just did a video before this. I can't remember what I said. Subscribe, join us in the Discord, ask me questions. If you have questions about this, you want to argue about it, hit me up. I'm here to help. I'm here to learn if I'm wrong. I would love to learn why and become a better trader, ultimately overall. So I'm an open book. I'm open-minded. But more importantly, I'm here to help, guys. This is my passion. My channel's taking off. I'm super excited about it. I'm probably going to talk about it every single video, guys, but I'm actually super excited about it. I love helping people learn about what I know, whether it's this or breakdancing. I'm a breakdancer, or whatever it is. I just love sharing knowledge. I think that connection and community is one of the most important parts of our human experience, and you didn't come here to listen to that. So I'm going to get off this video. Peace. Thanks for watching.